Every market has a breaking point, the moment when the old price can no longer contain the new reality. For XRP, that moment is getting closer every day. Because what's coming isn't another hype cycle or rumor. It's a repricing event, a global financial adjustment triggered not by speculation, but by mathematics, regulation, and infrastructure that's finally ready to scale. Welcome to Crypto Equation, where we cut through the noise and look directly at the signals shaping the next financial reset. For years, XRP has been misunderstood. Critics called it dead, stagnant, just a banking token. Meanwhile, Ripple kept building quietly, connecting corridors, negotiating with central banks, and aligning with standards that every major financial institution on Earth must now follow. And now, those same institutions are reaching the point where they can't avoid Ripple's infrastructure anymore. That's what triggers repricing, not hype, but necessity. Because when the system needs something, it stops asking if the market likes it, it simply revalues it. Let's define what repricing actually means. Repricing doesn't mean a random price spike. It means the market reevaluates an asset's true role relative to its utility. When utility changes, valuation adjusts permanently. That's what happened with gold, when nations abandoned the gold standard. It's what happened with Apple when smartphones became essential. And it's what will happen with XRP when global liquidity finally demands a neutral bridge asset. You can't settle trillions on outdated systems forever. Eventually, efficiency wins, and when it does, the market reassigns value overnight. The groundwork for that shift is already visible. In 2025, ISO 2022 became the unified messaging language for international banking. Over 10,000 banks now use it, and Ripple has been ISO 20022 native since 2017. That means Ripple's network and XRP are already technically integrated into the world's next G financial backbone. The plumbing is connected. It's just not fully turned on yet. When it is activated, liquidity must flow through systems that can handle instant compliant settlement. That's what XRP was designed for. And once those flows start, the market can't keep pricing XRP as a speculative asset. It will have to value it as infrastructure. Every infrastructure asset goes through three phases: ignorance, resistance, and acceptance. XRP is standing at the edge of phase 3. You can feel it in the tone of headlines. The lawsuits are behind us. Regulators are outlining frameworks. And Ripple is expanding into tokenization, custody, and CBDCs. The stage is set for integration, not argument. When institutions realize they can save millions per corridor by using XRP as bridge liquidity, adoption won't be optional. It'll be operational. And that's the catalyst for repricing. Because once utility becomes mandatory, supply and demand start a new equation. Let's talk numbers. There are about 100 billion XRP in existence, with roughly half circulating. Now imagine a world where even 1% of cross-border payments, roughly 150 trillion annually, passes through XRP. Even at minimal liquidity usage, that volume would require multi-billion-dollar daily throughput. Markets must reprick to meet that scale. That's not theory, that's arithmetic. Liquidity depth defines price. The deeper the demand, the higher the value required to sustain it. That's why repricing isn't an if scenario. It's a when, but most investors won't recognize it when it happens. They'll be watching charts, not corridors. They'll see a move and assume manipulation, without realizing the infrastructure finally went live beneath their feet. Because repricing doesn't announce itself. It just shows up. It's quiet until it isn't. Now, let's examine what triggers that moment. First, institutional. Clarity. Once major regulators classify XRP as a utility or settlement asset, not a security, compliance barriers vanish. Banks and payment companies can engage directly. Second, liquidity corridors. Ripple is already operating in over 70 countries. Each new corridor increases velocity. The more it's used, the more valuable liquidity becomes. Third, tokenization. When trillions in real-world assets, treasuries, real estate, carbon credits move to blockchain, they'll need a bridge between blockchains and fiat. That bridge must be instant, cheap and neutral. Only a handful of assets qualify, and XRP leads that list. These three factors converge: clarity, corridors, and tokenization, and price can't stay where it is. Now think about what happens psychologically when repricing begins. Most holders won't believe it. They'll expect a correction, waiting to buy back lower. But once utility pricing starts, it doesn't behave like speculation anymore. The floor rises because the system now requires XRP liquidity to function. It's like fuel. Once the planes are flying, you can't price jet fuel like water anymore. At this point, we must separate hype from reality. Repricing doesn't mean XRP suddenly leaps to unimaginable numbers overnight. It means it transitions from retail volatility to institutional stability, from being traded to being used. That shift alone could send valuations far beyond what retail imagines, not through hype pumps, but through sustained structural demand. When a market reprices, it doesn't happen in a straight line. It happens in phases: quiet accumulation, structural awakening, and finally public realization. Right now, we're sitting at the end of the first phase. Banks and fintechs are testing corridors. Governments are drafting digital asset frameworks. Institutions are building liquidity rails behind the scenes, and retail. They're staring at charts, convinced nothing's happening. That's exactly what it looked like before every major repricing event in history. When gold was revalued in 1933, the headlines were calm until one morning the entire market woke up to a 70% higher price. When Apple split its stock in 2005, most thought it was overvalued until the iPhone launched and the market recalculated overnight. When Bitcoin broke out of $1,000 in 2017, the average investor was still arguing whether it would ever work. Repricing always feels sudden, but it's just recognition catching up to reality. And in XRP's case, reality has been building quietly for a decade. So, what could trigger that recognition moment? 1. Liquidity migration. As soon as more global corridors choose XRP over legacy systems, the transactional demand shifts permanently. Each ODL corridor adds constant buy-side pressure to source XRP liquidity. 2. Institutional custody. Ripple's acquisition of Metico wasn't random. It gives banks secure access to hold and move tokenized value. Once large institutions can safely store XRP, usage will explode. 3. CBDC interoperability. Ripple is working with multiple central banks to connect sovereign digital currencies through its ledger technology. When CBDCs need cross-pair liquidity, the bridge asset must be fast, neutral, and already integrated. That's XRP. When all three forces hit at once, the price won't pump. It will reset to reflect new utility. Repricing isn't a moonshot, it's an accounting correction. Right now, XRP is valued like a speculative token. After utility demand, it will be valued like a global settlement asset. Think of it like real estate. A plot of land near a new highway is cheap until the highway opens. Then overnight its value multiplies, not because the land changed, but because access changed. That's what's coming here. Here's what most people will miss when it happens. They'll see headlines about XRP price surging, but they won't notice why. They'll think it's retail hype again. In reality, it'll be the first wave of institutional liquidity routing through Riplet corridors, quietly repricing the asset by using it. They'll expect the spike to crash. It won't, because this time utility is the buyer. That's the difference. Speculation and function. Speculation fades, function sustains. Let's be realistic about numbers. Nobody can predict exact prices, but we can understand mechanics. If even 0.5% of global cross-pair volume, roughly 750 billion per year, requires XRP for settlement, liquidity depth must scale by trillions in nominal value. That doesn't mean XRP goes to fantasy figures overnight. It means the market cap must grow to support throughput. In other words, price follows utility velocity, not hype velocity. And that's what repricing really means. Valuation adjusting to throughput capacity. Now look at the psychology of this moment. Retail fatigue is at its peak. The lawsuit era drained belief. Sideways charts crushed patience. But institutions don't trade emotions. They trade readiness. While the public disengaged, the infrastructure matured, Riplet scaled, regulation stabilized, and ISO 2022 went live. The foundation finished while no one was watching. And that's exactly when repricing moments arrive. When conviction is at its lowest, you might ask, why would institutions suddenly trigger it now? Because liquidity seeks efficiency. Once using XRP becomes cheaper than not using it, adoption becomes automatic. Markets are ruthless about cost. They don't care about tribal debates. If XRP saves time and money, it wins. And when that utility becomes visible in quarterly reports and payment data, the repricing will no longer be deniable. At that stage, analysts will call it surprising growth. But those who understood the groundwork will just nod because they saw it coming. Repricing will also reshape perception. For years, XRP has been seen as the underdog. The after repricing, it becomes the benchmark, the yardstick other settlement assets are measured against. Its price won't just represent speculation. It will represent network value, the sum of global trust in its efficiency. That's when long-term holders stop thinking in dollars and start thinking in function. You'll look at XRP not as an investment you sell, but as an asset you keep because the system depends on it. Let's be clear, not everyone will make it to that stage. Many will sell early, convinced the wait isn't worth it. They'll miss that repricing doesn't happen gradually. It happens after disbelief peaks. The same people who said XRP will never move will later say it moved too fast. That's how disbelief flips into regret. So what should holders do now? Stay informed. Understand that what's coming is structural, not speculative. Watch adoption metrics, ODL volume, Ripple partnerships, CBDC pilots, not just price, because those are the signals of impending repricing. When those metrics converge, charts will follow automatically. The bottom line is this: the financial world has already accepted that blockchain will power global liquidity. It's just choosing which rails to use. And Ripple built those rails a decade early. When the switch flips, the old valuation model dies overnight. The market will finally realize XRP was never about hype. It was about capacity. The capacity to move value across every system, currency, and border in real time. And that's the moment when repricing stops being a theory and becomes history. If this helped you see what's really unfolding, subscribe to Crypto Equation, the channel that explains the logic behind crypto's biggest shifts before they happen. Because the next time the world talks about XRP surging, you'll know it's not a rally, it's recognition.